All right, folks, so we've got Clayton Allen here on the show. We've just done a massive podcast, went for an hour. Fantastic stuff. He's very transparent in terms of everything he's doing, like money he's making, the money he's losing. Guys, go and check that out over there on tradingnut.com. But for now, we're going to walk through something on the price chart. I don't even know what it is. We forgot to actually sort of work out what it is, but we're going to walk through something. No doubt it's probably going to be one of your more discretionary trades that you take.
Yeah, this is, like I just told you in the show, what I look for discretionary trades. And if I zoom out a little bit, you can see I put bearish and bullish zones on the chart. And for this exercise, I'm just using the Euro US dollar on the daily here, just because everyone trades the Euro US dollar. But what I look for in a discretionary trade is I wait for price. If I'm using the daily, and this would be what, the bigger the time frame, the higher probability that this trade's going to work. So what I look for, this would be, a strategy for someone who's super busy, who doesn't want to stare at charts all day, is I target these S2 and R2 levels as my entry point. So if I go ahead and show you this, where is right here. If I go ahead and show you the settings I'm using, it's basically, standard pivots on TradingView. I use the Fibonacci. There's a few other ones in here. I like the Fibonacci, and I use the pivots on auto. So the pivot will move on what time frame you're on. And then I do 25 periods back, which I think the default is 20. So basically what I look for here, Cam, is when price hits this S2 level, I'll enter a buy trade here. So what I'm looking for is price veered far from its pivot. It's hit this calculated S2 level, and this will be my buy entry. Yep. You can see I had to go through some drawdown, right? And this is where I discussed in the show, I give myself some room. And on this daily, that's a lot of room. So you don't want to put yourself against a wall with a big trade size. But if you're patient, 2 days later, look what happens. And I usually take this pivot level as my take profit. You can see here, if you entered a sell trade off this pivot, now that trade's over and you started to see some price action, it tells you it's going to follow this trend. You can sell off this pivot now. And then look, it hits S2 again, you hit a buy. So if a really simple strategy is just wait for price to get S2 or R2 and trade the opposite direction, right? S2, you want to buy, R2, you want to sell. So again, right here, you would have entered, you would have went through a day of a little indecision, and then bam. And this pivot right here is not on the chart. If we scroll to where we're at, you can see last week's pivot. You can see here's a perfect example where you would have got crushed, right? If you would have sold on R2 right here.
Yeah.
But last week was a very, abnormal week in the markets. And, this would have been one where you go, I'm out. I actually didn't take the trade because of the fundamental volatility that was going on. So that's where experience comes in, with the coronavirus and all the fundamental crap going on. It's probably best to just stay away. But you can see right here, price hit S2. If you entered the buy trade, bam, came up. And this is where, you don't want to be greedy and, you're in profit, take your profit or set a trailing stop loss. Let's find an R2. So right here, you can see price shot up, hit R2. So if you had a pending order, you entered, and then it dropped. So you would have made money here. And I don't necessarily set my stop loss. I just calculate in position size that gives me plenty of room.
Yeah. So if I suppose if you're looking at the take profit of the pivot, where would you just go? What you'd
So
sort of say?
you're gonna see this pivot,
Yeah,
right? When this R2 posts, you're gonna see this pivot.
yeah,
So that would be where I set my take profit.
yeah,
But if I wasn't watching this trade, look what would have happened. I entered, I would have got close, and then it would have came up and screwed me.
yeah.
So this strategy isn't a set it and forget it. You definitely could. What I do a lot of times is I set my pending orders on these levels, or I set here on TradingView an alert. That's probably what I do most of the time. Is I'll set an alert at these levels, and I have my own YouTube channel where every Sunday I go through all the pairs, I plot these zones, and I set alerts. And then as the week goes along, when this alert's triggered, I will record myself taking the trade on TradingView and put it out there for the world to see. And then that trade gets also the signal goes out on my Telegram channel for people that want to take the trade or not.
Cool.
This strategy also works very well on the hourly chart. Obviously, these are different levels, right? But you can see this is where price peaked out on the euro US dollar during our panic last week. And look, we hit R2. You would have had to deal with a little bit of a drawdown, but came down to the pivot.
Yeah.
So this is a lot more intraday move. I'm historically more of a swing trader than I am a day trader. But if we truck along here on the hourly, right, you can see, okay, we hit S2 here and we got a little bit of profit. Here's an example. And remember what I said, the smaller the time frame, the less probable it is. Here's an example where you would have bought, you had a little bit and then took you out. So, if you go down, if you're going down in time frame, this is where I have those supply and demand zones on the hourly or on the daily. But you can see if you're hitting an S2 and you're in this, we had that bounce. So I kind of use those zones on the daily to kind of tell me where I'm at on the smaller time frames, if it's a little more probable than normal. I mean, obviously it worked down here, but I would tell you this strategy even works on a 5-minute. It's just way less probable, right?
Yeah.
And this is where I use Knoxville divergence a lot, where you can see on the ones that worked, lots of Knoxville divergence posts. That's this red line.
Yep.
So if Knoxville divergence posts, it hits S2. Now I'm a buyer. Didn't see Knoxville divergence here, and we didn't hit R2, so I didn't sell. We did have Knoxville divergence, and it hit S2. I bought. You would have squeezed out a little bit of profit here, right? Or, once you got into profit, you moved your stop loss to break even. Let's just say you get out of that one. But then you have Knoxville divergence again, hits S2, you're a buyer, and hopefully you held on to that thing.
Yeah.
Well,
cool. Well,
like
look, this is brilliant stuff. So I think there's a lot in here for the guys to think about, take home, and have a bit of a play with. Then what's the best way for the traders to get hold of you?
If they want to go to my website at www.allenfx.com, they can get a hold of me there. If they're already on TradingView, you can find me on TradingView, which is Allen FX LLC. I would love it if you follow. So then you get all of these cool little discretionary trades that I take all week. And, I get some comments once in a while. I'd love some feedback.
Cool.
I always love hearing from other traders because that's how we learn, right? That's how I learned, is listening to other traders and seeing what they're doing and then just making it my own.
Yeah, look, and guys, this is only part of what Clayton does. So if you want to hear more of what he does, which is very much an automated way of trading, then head over to the tradingnut.com site. There will be a link underneath this on the YouTube channel, and you're going to get the full hour-long interview that we did, where he goes through a lot of the automated stuff that he does and how that sort of relates to what we've just seen here today. So, well, thank you very much again, Clayton, and have a great day. And hopefully you guys out there enjoyed this. And remember to subscribe to the channel and check out another one of the videos.